All right. So I'm going live right now, folks, because I am. This is a necessary thing to do. I'm not going to be live long. Might be maybe 30 minutes. So if you catch it on the live, cool. If you catch it on the replay, cool. Post your questions, comments, concerns in the thing and all that. But here we go. So let me hit y'all with my intro. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker, and I'm back again today to weapon tap on your head with more ADH Wealth Solutions. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. Bear with me, I'm walking in my car. I got my little cup of coffee. I figured I'd do this and I'd leave the house so I don't have to be in the house with my wife or my cats and talking about this stuff. Plus, me and my wife are about to be watching some of the YouTube content we watch together. So I told her I'd go for a brief walk. Before that, while she's making dinner, she's making some chicken and broccoli with white rice. And I ain't want to be in the house smelling all that good stuff while I'm going live. So, what am I talking about here today? Well, if you want to get rich, don't sell life insurance. Now, if you want to get wealthy, sell life insurance. But here's the thing. There are way too many people getting into this business who have no business getting into this business. And that's from all areas and all aspects. I'm going to turn off my camera just because I'm about to start my car and I don't want social media to be whatever in. Getting into, and I'm probably going to have to turn off my radio because I know it likes to be random like that. But when you're looking at getting into financial services, right, there's a major difficulty. And the major difficulty right now is that you've got a lot of these companies who are telling people that they can come sell insurance and you can make, $1,000 a week extra and blah, blah, blah. And while it's possible, it's not probable, right? What do I mean? Well, is it possible that you can make an extra $1,000 to $3,000 a week selling insurance, especially on the life insurance side? Because the life insurance side is the most lucrative portion of financial services. I know they say AUM and investments. Motherfuckers don't make no money selling investments. You got to get somebody, if you're charging a 1% fee, you got to get somebody to give you $50,000 in order for you to make $500. Now, on the flip side, if you get somebody to give you $100 in a life insurance policy or $1,200 a year, you make $600 at a 50% contract. And that's why all those investment people speak against life insurance, because they don't want you to buy life insurance, because life insurance agents make way more money than investment people. Because again, how many people you think got $500,000 to throw around so that at 1% you could get $5,000? You see? You see how crazy that shit is? Right? So, I got my little cup of coffee here. Like I said, I'm in my car. Turn on the light. It is what it is. That's why I'm turning the camera off. But you figure $500,000 at a 1% asset under management fee gets you a check of $5,000. You know how I could get a check of $5,000? I get a check of $6,000 if I get somebody to spend $1,000 a month on life insurance. That's $12,000. Do you think there's more people who have access to $12,000 or $500,000? I think there's way more people who could grasp the ride around spending $12,000 in a year. But that's why I say if you want to get wealthy, sell life insurance. If you want to get rich, don't sell life insurance. But here's the other thing. Do you know how long it takes for you to learn how to get someone to spend $1,000 a month on life insurance? Because most people don't understand life insurance because they get berated by these people telling you to invest. Investing helps the investment advisor. It doesn't help you, the consumer or the investor. None of these people, when they're telling you to invest, know about your risk tolerance, your exit strategy, your time horizon. Nobody ever tells you to look at a prospectus or a red herring. You're not even going to be able to look at a red herring because most Americans aren't getting approached by a hedge fund. But see, the shit I'm saying right now, it's not popular. That's why I only got like 3 people watching. Plus, I did this at random. Right? But do you think that so I'll tell you why I'm doing this live. There's a gentleman, Dennis Jerome Jr., who is hopefully getting into the insurance industry. And unfortunately, like a lot of other people who come into this industry because they see people who, you know, like myself, who bought a Benz off of one transaction that I did in life insurance. But I put over 15 years into this industry. Most people aren't going to get that, except for the fact that they do a quantity of policies. But see, here's the thing they don't tell you about when you're selling life insurance. Your money's not yours. So if I have a client who buys a policy from me January 1st, bought a policy from me January 1st, 2025, I have to make sure that they pay that policy until January 1st, 2026. That's how, actually February 1st, 2026. That's how I earn my commission. Right? They don't teach. There's so many different aspects of this industry that they don't teach you, let alone learning product, let alone learning multiple carriers and learning product from multiple carriers. Because everybody's like, I'm an agency owner. No, you're not. You're in what's called an IMO, an independent marketing organization. I belong to what's called a BGA, a broker general agency. So we offer investments, but we don't offer real investments like stocks, bonds, and well, we offer mutual funds, right? Mutual funds and variable insurance and variable annuities. Why is this light on? What the heck? I don't know. There's so many damn lights on in my car right now. I had to turn that light off. I don't know why it came on. But so you hear like people from Primerica, oh, is your friend who's licensed in insurance, do they have their investment license? Well, that Primerica person doesn't actually have their investment license either. They have a Series 6, right? So as a Series 6, all that offers you to do is sell variable life insurance, variable annuities, mutual funds, and if you can land a group of 401k, maybe a Section 529 college savings plan, right? But then as a licensed life insurance agent, you have to know about those products because somebody's going to come to you and say, hey, what about this? What about that? What about this? What about that? I heard this. I heard that. Right? Let me see. So, you know, there's all these different things. And shout out to Malika. I'll take a look at. I see. I got something. I'll check it in a second. But absolutely is the fact that there's so many different products and so many different ways they work and so many different scenarios. And then you have to understand how each product correlates with each other. Right now, you have If I go on TikTok, there's a million people from Primerica who say term insurance, term insurance, term insurance, while simultaneously saying they have their national mortgage or their NMLS, their mortgage license. Well, if you've studied for the mortgage exam, then you know that you can take cash value life insurance into account, just like you would an additional. If you're looking at a multifamily property, you would take 75% of the rent, annualize it, and put that towards their income. So you can take a look at a cash value life insurance policy as an asset. But a lot of people are product pushers. Just like on the flip side, everybody now with a lot of these IMOs, FFL, PHP, WFG, GFI, they want to push the IUL. I've been on the IUL since 2012, and people have been on it since longer. The IUL, Index Universal Life Insurance, is not yet 30 years old. It came out in 1997. Okay? So it's a fairly new product. Now, the IUL may not fit for everyone in every scenario because it's fairly expensive. Can everyone get one and benefit from some of it? Yes. The idea is if you're going to start small, $50, $100, okay, cool. You're not going to get what you would want or what people are saying you can get out of the IUL at that small level. What you're supposed to be told is, hey, listen, we're starting here, and over time, you're going to throw more money into it. And when you throw more money into it, it'll grow. But it's not going to be this immediate infinite bank thing that everybody on TikTok and Facebook is telling you it is. It's expensive. Right? Are you going to have, I believe term insurance is important, as is whole life insurance, as is index universal life. I have clients with all three. Right? And why is that? Because certain things call for certain things. Right? So if I have a client who has a wife and kids and a mortgage, maybe I don't want him to go, balls to the wall on an IUL, throwing $1,000 a month into that at a minimum death benefit because he needs death benefit protection because God forbid, Kareem, what's going on? God forbid something happens to him. He needs to leave money for his family. He doesn't need particularly, a heavy IUL for accumulation, right? But the IUL can be an alternative to investing, right? But then you'll have people, life insurance is not an investment. It's not. Right? It has different characteristics than an investment. An investment inherently means that there's a risk of losing all of your money. Insurance is the transfer of risk. So insurance is saying, hey, if A happens, B's going to pay some money. Investing is saying, hey, if A happens, I could get a bunch of money. If B happens, I could lose all my money. Right? There's no guarantees in investing. These are things that you have to understand. So again, what's good, Hannibal? Again, the young man, Dennis Jerome, the amazing hustler, he's getting into insurance. And one of the fellas was like, hey, maybe, you could talk to him. I know a little bit about insurance, this, that, and the third. But not just him. There's so many people who are being recruited right now. It's ridiculous. Everybody is being recruited to sell insurance and is muddying the industry because they're not being educated on the products that they're selling. They're being educated on concepts. And yes, you can sell on a concept. What's good, Chaos? But outside of the concept, you have to understand the product. So I want you guys to do this. Now, I'm going to tell you guys this, and anybody who's an insurance agent who doesn't know may want to listen to this. Because I'll tell you what, some of the good Primerica agents, and when I say good, I mean good at what they do in terms of understanding the product that you're supposed to be against. This cup of coffee is good. I should have put some more sugar in it though. Is this. So whole life insurance. Let's look at term life insurance. Term life insurance is a necessity. Why? Because it's cheap. So you're not supposed to say, "Oh, well, term life insurance is cheap. You're paying $100 a month for a $100,000 death benefit with whole life. Well, take that $100 and buy. I could get you $100,000 a whole life for $14 a month. That's term life for $14 a month. That's not what term life insurance is for. Term life insurance is to say, hey, since it's cheap, and we talk, especially in the black community, we talk all this generational wealth willy-nilliness. Then let's not just talk about it, let's be about it. So if you go to Google and ask Google how many years is a generation, it'll tell you between 20 and 30 years. If you go to Google and ask, as of Q4 2024, what was the average annual income of an American? They'd say $65,470. So let's just say 60,000 times 20, that's $1.2 million. Right? So your idea is you spend $500 a month on a $3 million term policy. So God forbid you die, you actually leave something to your family, not $250,000. Why do we think, oh, $250,000 is a lot of money? Because we haven't held $250,000 in our hand at once. A lot of people. So we value it and mistakenly think it's a lot of money. It's not. Because 250,000 is 51, 52, 50. So that's $50,000 a year for 5 years. Right? So most Americans, if you've worked for 20 years at just $50,000 a year, gotta let you know something. You're a millionaire. Now, the problem is that most Americans think a millionaire is someone who can just throw money around and throw bunches of money around for no reason. No. That might be a liquid millionaire, meaning that they have liquid money to throw around. Like your favorite celebrities. But I got news for you. If you made $50,000 a year for 20 years, you're a million. If you own a home or own a mortgage, it's likely you're already a millionaire on paper if you have assets. So now, let's look at the next step here. We've got, that's the term insurance. You want to buy a big policy because it's cheap. So to get, a $5 million death benefit might only cost you $500 a month. But you've just damn near $1 million extra money. I think my family was spending my life insurance money. They claim I had it since I was young. I'm in my 30s, and I only received not even half of it. Are you saying your benefit, you were listed as a beneficiary? So Hannibal, here comes a problem with that. Children should not be listed as beneficiaries because the insurance company will not give you the death benefit until you are what's called the age of majority, which some states is 21, some states is 18. But then that can be the executor of your estate. And then that becomes difficult because you have to have trust that the executor of the estate will actually give you your money. There's situations. Now you may have recourse. You may be able to sue, the person and say, hey, they spent this money not on my behalf. So those are some things there. Now let's look at whole life insurance. Right? Not all whole life insurance is created equal. Not all term life insurance is created equal either, but we're going to talk about that later. So some whole life will be those Alex Trebek policies you see on TV. $9.95 per unit. Well, that final expense is a whole life policy. But the way it's structured, so on and so forth, it's very expensive and it's not meant for for you to build cash value. But let's look at the type of whole life insurance that is meant for you to build cash value. It's something called participating whole life, which pays a dividend. And life insurance is the longest paying dividend product on the planet. So the longest paying dividend stock in the U.S. is Black & Decker, and they've been paying dividends since, I believe, 1858. New York Life is the longest paying dividend life insurance company, and they've been paying dividends since 1834 with no interruption. Okay? So now what I want you guys to do is the next time you talk to a whole life insurance proponent person, ask them, hey, do you know how this participating or dividend paying whole life policy derives? And ask them like that. How is the money for my dividend derived? I was a 15K life insurance policy. I only had 2,900. Like I said, they claim I had it since I was young. I received it when my grandmother died. So Hannibal, that I'd have to take a look at the policy to tell you the provisions, this, that, and the third. It sounds like it might have been reduced, paid up. So the death benefit might have been 15K, but the cash value, they may have canceled it and stopped. And so the death benefit was only 2,900. Yeah, there's a lot that comes to that. And they may have spent it on other things like final expenses. And with that small face amount, that sounds like it was a final expense policy, because final expense policies are usually going to be $25,000 or less. And so those aren't going to build a lot of cash value. So that 2,900 for 30 years, that's about applicable, because the cost of insurance goes up every year. Every year older you get, it costs more to insure life. But so I want you guys to ask these whole life people, hey, how is the dividend derived for my, or where is the money for my dividend derived from? Now, initially, they might tell you something dumb. Oh, it comes from the premium. Wrong. Oh, well, we get money from, because term life insurance only pays out 1% of the time, which is true, but that's not where it's derived from either. So where is the money for dividend paying whole life derived from? Well, I'll tell you. Insurance companies invest in bonds in large tranches. Now, your average person will say, well, why don't I just cut out the middleman in the insurance company and invest in the bonds myself? Because you can't afford to. You are not an institutional investor. Yeah, email me, Hannibal, and we'll talk about that. But you're not an institutional investor. So you can't invest in bonds the way that an insurance company can, because the insurance company is going to invest tens of millions of dollars at one time, if not hundreds of millions of dollars at one time. Right? And even though your average American might be a millionaire, they don't have tens of millions of dollars to drop at one time. Now, when they get their conservative between 4 to liberal 12%, they turn around and they give that to some of their policyholders. Again, only those who have what's called a participating policy or a dividend paying life insurance. Right? So then you would ask, well, what about these IUL guys? And IULs do not pay dividends. They give you interest credited because they're linked to the S&P 500 or, the Morgan Stanley International, the Russell 2000. They're linked to an index, right? So you say, well, where is the money for the interest credited to my IUL? Where is that derived from? And again, a lot of agents who are just product pushing who don't know, well, it's from the premiums of the policy. No. So once they get their money from the bonds, they then invest in options. So you'd say, well, why don't I just invest in options? Because again, you can't afford to invest in options the way that an institutional investor will. Because the institutional investor is buying tens of millions of dollars at one time. Or they're investing in tranches, hundreds of millions of dollars at one time. You, the average American, cannot do that. So now they go, oh, well, if the option should accrete, meaning it wins, right? They then take some of that and they credit interest to your IUL. If the option should fail, they just let it fall off and they take the hit on the chin. It has zero effect on your policy, zero effect on your premium, zero effect on your cash value. But it's a great thing to have. Give me 1 second. I'm going to switch from my car Bluetooth to my phone Bluetooth because I'm getting ready to go back in the house because I've been on for nearly a half hour, which is crazy. But you figure the money from, so this is where the money derives from one thing and, goes to the next. Okay, cool. So a lot of agents don't know about policy structure, right? Because you can have a whole life insurance policy with term life attached to it. But again, there's so many different strategies with life insurance that people are unaware of. So what has to happen is you as the consumer have to know what it is that you want your life insurance to do. And most people are unaware of what life insurance can even do. They just think it's a check when someone dies. But life insurance can be added to your net worth. You can purchase a property with life insurance. You can qualify for a loan with life insurance. SBA loans or Small Business Association loans, if you go to SBA.gov, one of their requisites is for you to get a collateral assignment or a life insurance policy in order for them to give you the loan. I think it's an SBA 7. Right? So here's all these things that you're looking at that are in the vein of having those life insurance policies. But again, the major issue is that you're going to have a lot of agents who are unaware of this, and you, the general public, don't know it because there's a lot of people who come online and they talk very confidently about stuff, but they have no idea how this stuff works. Right? And so you'll hear them, oh, I'm a broker. Technically, there's no such thing as a broker when it comes to life insurance, right? There's an independent agent who has multiple carriers that they may work with. So it's easier for the average consumer to understand by us just saying we're brokers. But the only brokers are stockbrokers, real estate brokers, and health insurance brokers. Otherwise, you're just a independent agent, or you have multiple carrier relationships. Then you'll have people who are like with WFG, PHP, GFI, FFL, or one of these other what I call 3-letter IMOs, which is a pejorative. And they'll say, oh, well, I'm an agency owner. You're not an agency owner. You have a quote unquote team and you're just a fucking recruiter. Right? And all you do is recruit. Right? They don't know, and then they'll pay you all these extremely high commissions. So insurance agents get extremely high commissions. Street level is anywhere from 50% to 90% of what you pay per year goes into the agent's pocket. Now, when you're looking at these IMOs, they're getting up to 140% of what you pay per year. All right? So you figure you pay $1,000, they're getting $1,400, right? You pay $1,000 for the year, they're getting $1,400. This is why life insurance is a great way to get wealthy, but you also have to make sure that the business stays on the books for 13 months. And this is why it's a major difficulty. The insurance industry has a 92% fail rate, right? Hannibal, if you don't have my email, it's in the description of most of my videos. Um, but the insurance industry has a 92% fail rate because a lot of agents have no business getting into this industry. How you doing? Because they don't have the they just don't have it, right? So, thank you. So what happens is the thank you the extreme recruiting happens, and agents are going to end up failing out because there's no meat on the bone. All right. Perfect time. What's going on? Four, please. Guys, I might lose you. I'm on an elevator. That's all right. That's all right. So what happens is, again, you got a lot of people who recruit, and they don't know shit about the insurance industry. So you, as the consumer, are end up getting screwed, right? Now, again, am I saying I know it all? Yes, because I'm a know-it-all. But the reality is, I study this stuff, so I have the contra code: up, down, left, right, in, out. Right now, again, when you're looking at the IUL, most agents have no freaking clue how it works, how to properly structure it, the who, what, when, where, why, right? Again, there's a study from LIMRA, the Life Insurance Marketing and Research Association, from 1993, have a good one, that says 1% of term policies pay out. That doesn't mean you don't need term insurance. That means you do, but you need to understand what you have it for. Just like when you're looking at final expense, right? There's nothing wrong with final expense. You just need to know what you have it for, right? And why you have it, right? And when you're looking at things like universal life, which is different from indexed universal life, you need to understand what you have it for, right? And then when you're looking at VUL, variable universal life insurance, you need to understand what you have it for. Right? So I'll tell you like this. Most hated, what's good? The average wealthy person insures one life at least 7 times. Why? Because they get a policy on this person when they're a juvenile. They get a policy on a person, when they're married. They get a policy for this. They get a policy for that. So they would get a permanent policy for when they are, firstborn and they're juvenile. And you'd be like, well, why would you get, a policy on a kid and spend $200, $300, $400, $500 a month on the kid's policy? Well, because it's an alternative to what they call the Section 529 College Savings Plan. Because the 529 College Savings Plan was not meant to be a savings plan. But you see how I'm just rattling all this stuff off to you guys? Do you know how many agents are unaware of a lot of this stuff? Things like collateral assignment, things like premium financing. There's so much stuff to learn in this industry that so many agents are completely unaware of, that they don't know and that they're not trained in, right? So a lot of agents are just trained in, hey, the IUL, go out there and sell the IUL. And they have this thing called their upline, right? Because a lot of these insurance companies now, or these insurance organizations, are MLM, right? So they recruit you. And what happened was this. Most of these 3-letter IMOs, PHP, FFL, GFI, WFG, I can't think of, there's probably a ton of them. But what happened was they decided to take the model that Primerica has, except for that they offered permanent insurance. So they sell term life insurance and whole life insurance. LA Fire, I wanted to ask you, why not just get a life policy just because they have the money to rebuild? So that's a little different, perfect timing. And I'm not on YouTube right now. I need to give out some more wrenches. But I'm only on StreamYard at the moment, I should say. So that's a great question, perfect timing. And so the reason that happens is because life insurance takes time for the money to grow, right? Generally, whole life insurance is a minimum 10-year strategy, right? Or what, if we were talking hedge funds, would be a lockup provision, where you have to have this money in there growing because the insurance company, does not make money off of whole life insurance or permanent insurance for the first few years, right? The first year, oh yeah, no, I understand, but they wouldn't have unless there was a. I mean, technically, they could use it as collateral to get a loan to rebuild there. So if they had like $1 million life policy, they could go to Chase Bank and be like, "Hey, give me $500,000. I need a loan for a construction, and here's collateral." But again, it takes time. They would have had to have had the policy for at least 2 years. So to further answer your question, and I'll put that up here because that's a great question. And thank you for that, because it's difficult sometimes to just fly solo with this stuff, especially because this insurance shit gets boring from time to time, and I sell it. So trust me, I understand, y'all. It gets boring until we talk about stuff like this, where it's ways that you could get that check cut, right? So what perfect timing is saying here is, yeah, you could have life policy. Home is ringing. Had a permanent policy and borrowed against it, not from it, but against it, to rebuild your house, especially with those LA fires, right? Um, that's kind of messed up. And I also have dabbled in the property and casualty world, but I've been out of that loop for a couple of years. And if you're not on it consistently, it's hard to stay on top of it. Property and casualty, or car and house insurance, they make the least money. The next is health insurance. They don't make a lot of money either. Life insurance makes all the money, right? Because these are long term things, and they're tax strategies, right? If excuse me, if I haven't told folks before, go to Google and put in these words: Senator Ron Wyden, Wyden, against PPLI, private placement life insurance. It'll show you there's 3,000 people in America who have a PPLI policy, and those 3,000 people with PPLI policies account for $40 billion of tax sheltered money. So $40 billion of money that should have been paid in taxes that ain't been paid in taxes. Char Willie was good. So yeah, those LA fires, it's kind of hard to do that, right? Because though you can use it as collateral, it's the time, because life insurance companies don't make, the first thing they do is they got to pay me, right? But outside of paying me, they got to pay your doctor to get the medical records. And then they got to pay somebody to come and do a health exam. And then they got to pay their underwriters. And then they got to pay this and they got to pay that. So for the first few years, the insurance company ain't making no money. That's why they like to push term. Because if you go to a website called termlifeonline.com, they'll tell you insurance companies expect to pay out a term life insurance claim on about out of every 100 policies, and the likelihood could actually be less because people cancel their policies. So you mean to tell me if I got a chicken spot and all I do is take online orders, and I know that every day 100 people gonna order chicken wings, but all I gotta do is make one order of chicken wings, because 99 of them 100 people who order chicken wings ain't never gonna come pick them up. You know, I would definitely do that, bro. Give me 1 second, I'm gonna see if my wife is still watching TV, and I'm gonna just share this with y'all. Okay. My wife is not watching TV at the moment, so I'm just gonna mute the TV. I'm gonna see if I can hop on my computer real fast because I'm getting ready to hop off. Um, but I definitely wanna show y'all this, because this, y'all gonna flip your lid on this. Let me see if I can get on my StreamYard through my computer, and I will show y'all Senator Ron Wyden, PPLI, StreamYard. Boom. Give me 1 second here. Enter studio. See what we got going on here. Mute the mic. Add to the stage. Okay, so I'm going to keep my computer mic muted, but I'm going to present my screen to y'all. So, just so you can see this tax shelter, hold on, let me make this larger. Okay. Senator Ron Wyden against PPLI, right? www.finance.senate.gov, right? So, www.finance.senate.gov, right? So, again, finance.senate.gov, right? So this is not some little booty chatter. And while I'm at it, actually, since I can go to YouTube from my computer, perfect timing. Give me a second. I want to make sure you got wrenches. You and Hannibal. And then I will hop off here in a little bit. But just because I know you like that terminology, I wanted to show you. And salute to my man, Perfect Timing, because he be coming with the hard hitting stuff. Hannibal, let me give you a wrench as well. All right, so y'all got wrenches. So I want y'all to check this out. Wyden exposes private placement life insurance as a tax shelter for the ultra wealthy holding at least $40 billion. Right? Washington, D.C. Senate Finance Committee Chairman Ron Wyden, Democrat of Oregon, today released the result of an 18-month investigation into the use of private placement life insurance as a buy, borrow, die tax shelter for the ultra wealthy. Buy, borrow, die. I think I did a video on that in the past explaining the buy, borrow, die, where you can buy permanent life insurance, borrow from permanent life insurance, and die with permanent life insurance and never have to pay it back. But it found that the PPLI, the investigation, the first of its kind in the PPLI, found that the domestic PPLI industry is now a tax shelter made up of at least $40 billion in policy held by only a few thousand individuals who have net worths reaching into the hundreds of millions or billions of dollars. Marketing materials obtained by the committee from the largest PPLI providers revealed how PPLI products were explicitly promoted as tax-free investments in private equity and hedge funds. But how come everybody else online life insurance is an investment? Right now they say, oh, that's only for the wealthy. You need to invest in the stock market. Okay, let's look at something else. Well, no, we're not even going to look at something else because that's not what this is about. So I'm going to remove that. But I just wanted you guys to understand what we had going on here, right? Is this one I remove? Okay, got it. So, these are some of the things that were happening in the world of finance. And a lot of agents are not going to be able to research or understand these things. How many agents do you think who are just now getting into the business have ever heard of PPLI? Right? Not many, right? How many agents do you think have heard of premium financing? Not many. Did you know you can take out a loan to pay for your life insurance? So, if you wanted to get, let's say, a PPLI policy, right, where you're going to put, let's say, $1 million in upfront, but you don't have $1 million, but you have good credit and you have good payment history, and maybe you can afford $60,000 a year for a couple of years. So you'd be surprised. There's a video that I have of a gentleman, and I'm going to talk about that as well. But there's probably not a boatload of non-whites in America who know about these tools. But there's a guy that I know by the name of Dr. Sanjay Talani, who belongs to the MDRT, Million Dollar Round Table, right? And again, this is a lot of stuff that And these new agents aren't getting taught. And salute to you, Perfect Time, and thank you for that. Right? But these new agents aren't getting taught. So they're getting recruited, and they're just getting recruited to sell you an IUL or sell you a whole life or sell you a term policy, but not break down the who, what, when, where, why, or the how, right? Because listen, maybe you can't afford, $10,000 a month or even $10,000 a year on your life insurance. Does that mean you shouldn't get it? No, it doesn't mean you shouldn't get it. It means you should get it, and you should build up to a certain point. Because if people are telling you this, buy term and invest the difference, again, like I mentioned earlier, life insurance is the highest paid individuals in the financial services world. Those investment advisors that do AUM, assets under management, or AUA, assets under administration, well, they charge you a 1% fee. So now, in order for me to make a $500 check as an investment advisor, you have to come to me with $50,000. And that's how I get a $500 check. How do I get a $500 check selling life insurance? Get you to spend $50 a month? That's a $300 check right there. Right? But do you think it's easier to get somebody to spend $50 a month or $50,000 all the way? See, because when you're talking about investing, right? The reality is these little brokerage accounts that you're getting are not investing. There's a reason why. There's something called an SAR, Suspicious Activity Report. And I'm going to pull it up again on my computer in a second so you guys can see what that is. But an SAR is something that a financial institution fills out on you the time as soon as you make a transaction of $10,000 or more in aggregate. So if you're not doing something, if you're doing something less than that, these financial institutions don't want to sit there and take up all that time filling out an SAR, which they have to fill out by law that you don't know about, and send that to the IRS. They don't want to waste their or the IRS's time. So they'll let you, Fidelity will let you give them their money for $3,500, right? Charles Schwab will let you give them $5,000. They'll even let you buy stock slices for as little as $1. But that's just like perfect timing. You know the life we talking about. By the way, I'm trying to get connected with the homie Snoopy Badass, because one of the agents who works under me is from Compton, Peru, and she's big heavy out there, right? Well, she's not big heavy, but her family is big heavy out there, right? And I'm trying to get these rappers and shit to understand, right? I'm gonna show y'all some other shit real briefly about, especially because Perfect Timing just brought up how many non-whites know this stuff. So I'm gonna bring up the SAR, and again, these new agents are not aware of any of this. The only reason I know about it is because I went down the rabbit hole. And when I want to learn stuff, I learn stuff. Perfect Timing, I think you remember, was this 3-4 years ago when I was comparing life insurance policies to Ben. Yes, that's likely why they have those accounts less than 10,000, right? And because we all know that trick. Oh, you can't travel with 10,000, but if you travel with $9,999.99, you should be good. That's why they decreased the SAR to 5,000 aggregate. Right? I'm gonna show y'all all of this, and then I wanna show, because Perfect Timing had something that, again, he comes with the perfect timing in the questions, and I thank you for that. That he comes with the hard hitting shit, right? The stuff that maybe people are afraid to ask, and you shouldn't be afraid to ask, because the only stupid question is the question that you don't ask, because then you don't get the answer, right? That's the stupid question, is the one that you don't ask. The question that you do ask, you might feel like you got a little egg on your face. Maybe somebody will say something, but guess what? You're going to get an answer. So would you prefer to be docile and not get an answer? Or would you prefer to do what you got to do and get your question answered? I prefer to do what I got to do and get my question answered, right? And so, like I said, I'm going to show y'all all of this. Hold on really quick. So I'm going to show you all of this. In fact, let me bring myself back up here. Babe, that soup smell hella good. Yes, it does. Let me present. I don't even need to have my other self up there, but let's do this. We're going to go back to Google. Right, and I'm not even going to read this because, like I said, now you guys know about this committee on finance, and obviously it's not booty chatter, right? This investigation found that PPI-LI represents just 0.003% of all individual life insurance policies in force in the USA. The IRS is largely unable to enforce investor control rules in place to prevent the abuse of tax advantage financial products like PPLI. At the moment, there is no requirement to report the ownership of PPLI on a tax return, allowing the wealthiest investors to use PPLI to shield lucrative investments in alternative assets from the scrutiny by the IRS. Wow. Now he says, I'm a strong defender of life insurance as a source of financial security for hardworking American families and retirees. Right? Yeah. Well, y'all need some water out there in NorCal. Let's go to Google because I want to see what is an SAR in finance. Right? So, SAR, a suspicious activity report, is a report filed by financial institutions to help detect and prevent money laundering and other financial crimes. Right? So, what is an SAR used for? SARs are a vital source of intelligence for law enforcement. They help prevent financial losses and uncover criminal networks. They alert law enforcement to potential instances of money laundering or terrorist financing. So, who files an SAR? Financial institutions such as banks, other professionals such as accountants, solicitors, and estate agents. Private individuals who suspect or know of money laundering or terrorist financing. Now, let's go to, again, the government, occ.treasury.gov, right? So financial institutions must use the BSA or Bank Secrecy Act e-filing system in order to submit SARs, right? So, yeah, but listen, man, that's still easily caught, man. I'll tell you what we do is we do something called an ILIT, right? You know, to go Tom Brady. Tom Brady didn't want to sell life insurance, but his daddy do. I'll show you that in a second too. A financial institution is required to file a suspicious activity report no later than 30 days after the date of initial detection of facts that may constitute basis for filing a report, right? Under the BSA, financial institutions are required to assist U.S. government agencies in detecting and preventing money laundering and keep records of cash purchases on negotiable instruments. File reports of cash transactions exceeding $10,000, a daily aggregate amount, and report suspicious activity that might signal criminal activity, e.g. money laundering or tax evasion. Right? I'll give you an example. This morning, a client of mine wanted to make a payment into his retirement account. He's living overseas currently, so he doesn't have a United States phone number. So I had to call on three-way, but I had to use two different phones. So he said, yeah, I want to make a payment of $10,000. We had to go through all this dippity-doo. You know why? Because they were pulling up paperwork so they can file an SAR. Because they're going to be like, hey, IRS, you need to look at this guy and see why he's spending $10,000 in one day. Out of, now this is an account that has $750,000. So $10,000 for him is not that crazy, right? But now I'm going to pull something else up. Let me close this screen down. Let me pull up another screen for you guys, right? Because I wanna go through. First, I want to look at this, right? Which is the Boley report, or the bank-owned life insurance report, right? Let's present to you guys. Where is this here? So, Bank of America National Association, right? And these are dollar amounts in thousands, so these are billions of dollars here. Equity investments without readily determinable fair values, asterisk 5. Let's go to the bottom and see what asterisk 5 is. Include Federal Reserve stock, Federal Home Loan Bank stock, and Bankers Bank stock. So this is the stock market. Equity investments without readily determinable fair values. $6.114 billion. Life insurance assets, general account, separate account, hybrid account. Bank of America put $2.9 billion into the general account and $19.4 billion into the separate account. Or I'm sorry, not the separate, the separate account life insurance. That's not term life, right? Now I'm going to flip you guys' mind one more time because Perfect Time asked about how many non-black people are familiar with this stuff, right? And again, this is stuff that a lot of agents who are new into the business aren't aware of, aren't educated about. They're just going to keep you in the dark. So this is Life in the Midst of Death, Notes on the Relationship Between Slave Insurance, Life Insurance, and Disability, written by Michael Ralph for New York University. See, I'm a little bit of a nerd when it comes to this stuff, and I does my research. So let's just look at something here. In life, we're in the midst of death, and a day or an hour may paralyze the hand which feeds the helpless. In a country like ours, where with untrammeled energies and eager grasp, we are pressing along the road which leads to fortune and greatness, we sometimes travel too fast, and great commercial convulsions are inevitable consequences, which bring ruin on individuals the most prudent and cautious. Take a person so situated with the uncertainty of life hanging over him, and how much more cheerfully he would toil on could he say, come what may, my life is insured, and my wife and children are sure of something to save them from want. Written by Josiah C. Knott, Life Insurance at the South, May of 1847. Probably zero, Perfect Time, and I'll be honest. And then it says, as long as the Negro is sound and worth more than the amount of the insured, self-interest will prompt the owner to preserve the life of the slave. But if the slave become unsound and there is little prospect of perfect recovery, the underwriters cannot expect fair play. The insurance money is worth more than the slave, and the latter is regarded rather in the light of a superannuated horse. Also, Josiah C. Knott, Statistics of Southern Slave Plantation, November 1847. On August 25th, 2011, Rick Perry concocted a plan to take out life insurance policies on retiring public school teachers. The rationale behind his proposal that these senior citizens had a high statistical probability to die within the next decade, and when they did, the government of Texas could turn a profit. Michael Moore examines a similar practice in his 2009 documentary, Capitalism, a Love Story, through the devastating revelation that a number of Fortune 500 companies, including, let me increase this, because I get tired of hearing folks, I got insurance from my job. Bank of America, Citibank, McDonnell Douglas, Hershey, Nestle, Walmart, Procter & Gamble, and American Express have made use of what industry insiders call COLI, corporate-owned life insurance, more commonly known as dead peasant insurance. When Daniel L. Johnson died of cancer, Moore tells us that Amity Bank made more than $5 million on policies that it has taken out in his name that were never shared with his dependents. What? So yeah, I'm good. I got life insurance for my job. Cool. So you got life insurance to make sure that your job is good after you die. That ain't got nothing to do with you, right? Now let's look at our rap music. Hold on, wait. There's a portion in here I wanna look at. And if you want this article, hit me up. Let's look at this, and then I'm gonna hop off. All right. Plus my battery's dying. So let's look here. Da-da-da-da. Da-da-da-da-da-da-da-da-da. Okay. So, because it is intimately connected to our capacity to find relief from illness or injury, since it is bound up in our ability to earn an income, and with the fate of our closest kin, insurance, namely life insurance, has since the industrial age helped people to measure the distance from familiar modes of mutual aid. These formal structures of financial assistance continue to provide a language through which people comment on social mobility. ICE insured, fuck life insurance. Oh, says the rapper Rick Ross, who borrowed his stage persona from a notorious narcotics trafficker by the same name in Live Fast, Die Young, as he asserts that his jewelry is more valuable and thus more worthy of scrutinization than his own life. But let's look at this, right? And then we're going to go off. Colombian cocaine cartel life insurance. Cartels use life insurance to launder drug money. Hold on. Let's look at the United States Department of State.gov. BMPE, Life Insurance Undercover Operation Internal Corporation. Operation Capstone, a criminal scheme that targeted life insurance companies, where some $80 million of Colombian drug proceeds have been laundered. So if Rick Ross, the boss, is really, oh, I'm the boss, oh, I'm moving cocaine, oh, why the fuck are you telling black folks not to get life insurance when the real El Chapo doing it? Yeah, Hannibal, here's the problem. Now that he's had 2 strokes, you see, life insurance isn't just paid for with money, it's paid for with age and health. Now that he's had 2 strokes, he probably is what's called uninsurable. Plus, he was a fat bastard. So that kind of doesn't allow you to get life insurance. But, fuck life insurance. I'm moving cocaine by the boatload. No, the fuck you not. You know, in this article here that I'm looking at, there were 5 gentlemen indicted. One in San Francisco was indicted for moving 13 tons of cocaine a week. That's 26,000 kilos. My ice insured. I'm moving cocaine in my big vein. You know how many dudes I know today sell cocaine, ain't trying to get $100,000 trap? The fuck out of my face. Why are you taking risks like that? Yes, you're supposed to get life insurance before the health problems because it's paid for with age and health. But listen, ladies and gentlemen, I'm getting ready to hop off. Dinner is done. Me and the wife are going to chill out. So it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker, whapping and tapping on your head with another ADH wealth solution. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass, work in progress every day, and see success. Salute.